Hi traders, welcome to this week's pre-week market review by Trade Genius as we look at the US dollar, which continues to rebound amidst all of this global tension. Before we start, just to recap quickly, last week we did see, very interestingly, the pullback on the US dollar, and part of this was due to the geopolitical tensions that we're seeing, especially amidst Russia and the Ukraine, and also with the US intervention again over in Iraq. So that had a big influence on the commodities and the safe haven pairs. And let's look at the technicals in more detail now with our live analysis as we see how this affected the market. Here we start with the US dollar and the Russian ruble. You can see here very clearly the previous beginning of this downtrend there, which happened just in March when the tension started. And now we're seeing the last few days, especially a very, very choppy market here. You can see the gaps illustrated by these candles in between the red lines, and we see that it clung to the top of the Bollinger Band and a pullback happening there just at the end, which by the way is a good technical signal for you traders to use. When you see something clinging to the Bollinger Band and it starts to come off there, you can often short it. Moving over now, we see the Euro US dollar daily chart. Again, we see a very strengthening dollar over recent weeks and the recent months, but in the last few days we've seen a slowdown there as the dollar has pulled back. Specifically, targets in line are 134.70 levels, and the support which we're at now has bounced off from 133.50 levels. You can see here the general resistances though still way up there at 138 prices. Now let's look at the dollar CHF. Perhaps the biggest sell-off on the dollar last week was on this pair, especially on Friday, and you can see it there dropping all the way from 91 levels right the way down now. If we zoom out to 0.90 levels, we've moved you over to a daily chart, and we can see here the very clear range that this USD CHF trade has been offering position takers shorting from 91 all the way down towards 89 levels, where we see our next target in line. So you have there a good sort of 200 pip range, as I'm showing you now here with these arrows, and the Bollinger Bands are still insinuating that there is potential room for more selling on this dollar CHF pullback. I mentioned that it's a pullback, and that is because overall the dollar is still very much in for a strong 2014. Let's just look at this gold pair now over at the commodities. I said the commodities have become more attractive during these safe haven markets along with treasuries. We can see here a technical pattern, and this technical pattern is known as the inverse head and shoulders. We're going to draw that for you here. There's the first shoulder coming here on the left hand side, okay, which extends down to March 2014. Then you have the head in the middle there, the inverse head at June, and now we're having the right hand shoulder. So this, amidst with the pullback candle there, that's the last daily candle we see, which we're going to zoom in on now, is offering a nice bullish continuation pattern there to be followed on the gold commodity. This candle I'm just highlighting here is a doji reversal candle. So all in all, there is still some promising trades to be made there on the long gold side. Okay guys, before we leave you, there are a lot of big announcements coming out next week, and you want to keep an eye on these, especially towards the middle of the week with the UK MPC bank rate votes, and on Thursday the unemployment claims. So keep an eye out and trade safe.